Welcome back to this financial podcast. It's April 1st, 2019. I wanted to talk about the Lyft IPO, and there's a lot of interesting things that's going on here. And of course, I'm very curious and suspicious about what's really happening with this IPO. And what I'm talking about is, why did Lyft go public before Uber? I mean, Lyft is a much smaller company. They lost $900 million last year. Uber made $2.5 billion. They're around 5 times bigger than Lyft, and yet Lyft becomes the IPO before Uber. Now, when has that happened where this smaller company, the much smaller company, goes public before the much bigger company? I can't remember this happening. For example, one of the most anticipated IPOs was Facebook. Facebook went public way before Twitter, way before Snap, because it's the bigger company. It's the 800-pound gorilla in social media, right? So that makes sense. Now I'm thinking, it just seems like a ruse from Wall Street, to get investors hyped up into this IPO, to get them to put their money in, when the stock is already hyped up, when it's too high. I mean, it was over $87 before people can get their money in. And now, in less than 2 trading days, all right? The trading day isn't even over yet. The stock is down 30%, all right? Now, that's one thing. I just can't figure out why they would go public. And I'm thinking, it just seems like a ruse from Wall Street, to get people involved, have their money tied up, to lose money in this IPO, and not have the money to invest in what may be the real deal, which is the Uber IPO. Here's a company that's making money. It's the biggest out there. And you know what happens, right? The biggest get bigger. And that IPO may be the real deal. And now investors that got hyped up and have their money in Lyft, they have their money tied up into this company. Who knows if the company is going to be a success? They're losing a lot of money. I don't know what their plans of action are to make money. I mean, Wall Street is not going to help them. They actually have to earn money. When all the hype settles, where's the stock going to go? See, with Facebook, they faced a similar dilemma. I mean, look what happened. They were at an IPO of around $40, and it didn't take long for the stock to hit around 20 bucks. I mean, the stock was down around 50%, but the company makes money. It's profitable. It has a great economic float, meaning that they really don't have any competition. And look what happened later on. When they did have competition, they bought the competition. They bought Instagram, they bought WhatsApp, and they got even bigger. I mean, it's a great company. So even if you bought it at 40 and you held on, I mean, you would have around 400% as far as your gain. So, that turned out to be a great investment. But with Lyft, who knows what's going to happen here? Here's a company that is much smaller than the biggest one out there, unlike Facebook. They're losing a lot of money, unlike Facebook. And where's their growth? I mean, how are they going to compete with Uber? What are they going to offer? I mean, Uber is already expanding into Uber Eats and other businesses. They're all over the world. They really know how to scale. They know how to get out there and consolidate their business internationally. So I'm not saying that Lyft is not going to succeed, but what are their plans for success? I mean, where's the growth? If anything, you would think that Uber could possibly buy Lyft. Who knows, right? I mean, they're big enough, they're making enough money that they can buy them, and that would make the prospective IPO of Uber even more attractive. But the problem is, if investors got involved and they have their money tied up and lost money, now they're not going to have the opportunity to get into the Uber IPO, which I can't say for certain is going to be a great success. Nothing is certain, but I think Uber will succeed because they are the biggest. And that's just the way it works. The biggest get bigger, and they end up buying the smaller rivals. Some of them do. But at least you know that when it comes to ride sharing, generally the largest ones remain. I mean, it's not going to be Lyft that's going to emerge as the top player. If Uber is the one making the money, they're worldwide, they're expanding into other businesses. They have the largest driver network and the largest customer network that are using their app. But what I can see is that if you have a company that is generating profits and their IPO isn't even here yet, imagine how much hype is going to be behind that company. And you know how it is, hype is actually a good thing. You know, it's good to have a profitable company and hype at the same time because it can help the stock price. You know, there was a lot of hype behind Facebook, of course. I mean, the IPO did well when it first came out, but then it surely started to go down and started to trend lower. But if you believe in the business, I mean, if you believe in a ride-sharing app, then Uber is the play. I mean, that's the way to go because obviously it's the future. This is the way people are using, ride-sharing. I mean, it's just the way it is. And of course, Airbnb, that's something else that people are talking about. You know, the leaders generally get bigger. They generally buy the smaller companies. So I don't recommend buying Lyft. I don't think that getting into the smaller company is the way to go. I think the larger one is the way to go. Now, if Lyft can turn it around, if they can become profitable and they can become competitive, and of course if they're bought out, that can be a potential investment as well because, if they're purchased by Uber, it could really help the stock price. You could really be getting ahead of yourself talking about that because that can be sometime in the future. But this just seems like it's overpriced. It's a company that's losing money. And I think when the hype is over, it could be this stock could be really heading downward. So I personally would avoid it. As far as Uber IPO, that's something to look at. I'm thinking about possibly investing money in that stock because they are the biggest. They're continuing to expand. Fundamentally, they were losing money before they did this acquisition and collaboration in Southeast Asia and Russia where they just made a lot of money. So they're doing the things they have to do to earn money. It's a revolutionary business, even though it's been around a while, hasn't been around that long, but it's just a great idea, just like Facebook was a great idea, and they've been around for a very long time. And Uber is a great idea. Many people use it, and many people are going to continue to use it. I'm just kind of curious as to why this happened. It looks like Wall Street wanted to get people involved in it, to invest in it. And yeah, of course, the people make a lot of money. Who makes money? The venture capitalists, the underwriters, the people that got in early, they're the ones that made a lot of money on it. The investors that bought it over $80, yeah, they're the ones left holding the bag. So, I mean, that's the way it is. Wall Street makes a lot of money on impatient investors. They're impatient because they didn't want to wait for Uber to come public first. So they pile their money into Lyft, and now look what happens, right? So I think Uber would be the way to go. I'm thinking about investing money in Uber when the IPO does come out because I think it's going to grow. And that's the way it is. When you buy an IPO, you can't just buy because of the hype. You have to believe in the company. You're not just buying a stock, you're buying a company. If you buy the IPO in Uber, it should be something in the long term. Just like Facebook. Stock has an IPO and look what happens. It craters 50%. But it's a great company. So it just was a matter of time. If you're patient and you want to hold, well, what happens? You're rewarded. And I think Uber is going to be a similar situation. I think they're going to continue to grow and expand when the IPO comes out. You don't have to buy it right away. You can let the players get shaken out. Maybe the stock will come back down just like Facebook did. It's a possibility, so you can buy it somewhere around that price. But you have to buy a company that you believe in. If you're going to hold it, you have to believe in the company. Now, if you're a trader, it's different because you're there for the short term, but that's risky. That's the difference between being a trader and an investor. If you're an investor, you're in for the long haul. So Uber might be a really good opportunity. So that's the way I see it. I would like to know what you think about the Lyft IPO and Uber and the ride-sharing business. And if you would consider investing in any of these IPOs, what you feel about it, why you think Lyft went public before Uber. So please leave your comments. Please subscribe. Please like up this video. And thank you for tuning in.